Welcome everyone. This is me, Guillaume, and Rosalie. We're here for Stop Losing, Start Trading, where we the Panoptic team, teach Rosalie how to be a better trader, to use options as part of the strategies that are available to her, and use this in a way to teach her, but also the audience, how to trade options. Options aren't for everyone, but if you haven't tried it, if you don't know where to start, this is a place where you can learn a bit more. So, of course, everything we do here is not financial advice. You should not take this as us giving you financial advice. It's just for entertainment. We discuss those trades as well. The intern account on Panoptic does these trades. Maybe sometimes they listen to us, sometimes not. But overall, this is just for us to discuss how to effectively manage a portfolio of options and be successful in the long run. So, without further ado, how's it going, Rosalie?
Good, good. Yeah, just looking at the market, things are still pretty steady. I think this after last weekend, there hasn't really been anything too exciting. So hopefully, yeah, we can check in on that and see if the fees have accumulated in this not
Yeah.
so drastic range. I think that's good for
And
options.
I'll go right into it. Typically, we go over the market. We discuss how we feel, what events are relevant, and there's a big series of announcements actually that have gone out. So Brian Quintes is part of the CFTC chair. I don't know if it was confirmed, but that is a very bullish outcome for a crypto native. Being at the head of CFTC is much better than someone which is anti-crypto for sure. That might be why we see this huge jump. I know you're XRP holder, or you were. Yeah. How do you feel about this latest move in XRP?
Yeah. It's getting there. I think it still hasn't hit its all-time high yet.
I mean, if you zoom out, oh, I see. Something happened over the past few days, but it's on the coming up for sure.
Yeah, yeah. No, I'm yeah, definitely very bullish. I think they have a lot of financial, I mean, institutional backings to their token, so it should be, yeah, it should be definitely
Lots of,
positive.
yeah, the builders ecosystem. We don't know, but definitely a lot of institutional backers. Folks always ask about XRP options. This would have been a good time to buy calls. Unfortunately, we don't have a wrap version on Ethereum. We're mostly on ETH. But that's the whole. If the market goes well, many coins do well as well. ETH is another one that we look closely. We're on mainnet as of 2 days ago. We're also on Unichain. So the first layer two, expect a lot more of these layer two deployments with Panoptic. So gas will never be an issue anymore. The chart for ETH looks pretty good over 24 hours. What do you say?
Yeah, definitely. I think it's still kind of down from the whole month perspective, but I'm just trying to think in terms of monthly options now. So I'm
Exactly.
looking less at like the day to day and more big picture, but it's looking really good right
And
now.
if we remember, we had a bearish trade on ETH exactly before the crash. So Rosalie was right. The intern made some money on that trade. As you say, when you have a time scale in mind, if you look at the minute by minute chart, you may see some things that you don't see when you zoom out. So this is a sideways market and a big dislocation, another sideways market. So what you think is happening here moving forward is very different than when it was higher or right after the crash. So I think we had a trade that was bearish that was somewhat successful here. We had in delta neutral that we created last week. This is also paying off well. We'll see on the charts. But yeah, I think the best advice I can have for an options trader is to have one, a directional assumption in mind, but also a time scale. Very, very important to know, is it a trade for 1 day, 1 week, 1 month? Could be a trade for years in advance. Again, XRP holders finally get some payback for buying maybe a year ago. Here, when you're in the options world, the time component is extremely important. This is your options are a prediction market for price. And in a prediction market, there's an event, election, Super Bowl results, and it's done afterwards. Here with options, you have a continuum, I guess, if you want, of outcomes, which is not just the price above or below a certain strike, but the more above it is, the more money you make, or the more below it is, depending on your assumption, the more money you make as well. So options have this maybe prediction market quality to it, but it's both time and direction. So that's a very, very good place to start with. So finally, we'll go maybe over Bitcoin. 24 hours still up. Bitcoin drives a lot of the market. Uh, Trading the 100K strike is something that a lot of folks have asked about, and I'm happy to say that the pips or the points will also be enabled to the BTC USDC market on Panoptic. And it now would be a good time to go over those markets. But the way that we frame this is that we are creating points campaigns. We are doing this for several markets. We have ETH USDC, which is one market that's been activated, if you want, since the beginning. We have BTC ETH. So this is a ratio, interesting trade. Got some TVL there. Currently, we haven't announced it, but we enabled it. So if you guys want to trade the Bitcoin price, trade the 100K strike, you can actually do it now and get points for your TVL, for your trading activity. Turns out it's actually a very good market. The Uniswap liquidity is well deployed. Most of it is in a range where you expect this to maybe go around over or below in a month or so, but overall, it's well deployed. It's one of the very, very important markets we want to have. So here, very, very soon, even now, but very soon as people trade, you'll have a lot of liquidity to either buy options or sell options, and this is kind of the next market. So the markets again. We can look at the portfolio of interns. So if you remember, we have pips here. We have enabled them last week, but they've been running since we launched in December. We can look at the leaderboard and look at who gets what in terms of points allocation. We build this so that sellers and traders, those that are a bit more active, earn more points. And we reward this with the amount of premium they pay or premium that they receive. So the top 15 are definitely on the options trading side. Sellers, buyers allows you to earn points faster. And if you just want to be passive and deposit your liquidity, you can also be one of those users that earn points just by being passive and not just earning points, but you earn yield from that PLP or the pool. The intern.panoptic is steadily climbing their way into the rankings because they are not passive at all. They are extremely active in terms of strategies, and they are on the right path again to kind of overtake the users. Rank 67, we started it. They were ranked, I think, 85, climbing the ranks. They've been doing this for 2 weeks and already are kind of the top 100. So this is very, very cool for intern. Let's look at their portfolio. And maybe, yeah, Rosalie, this is the standard question we start every meeting with. What do you see? What's your take at looking at the portfolio page of the intern account?
P&L is down. So yeah, I guess that it might be a little worrying, but
It's $43, and if you count, there's about $10,000 spread across several underlines, and that's the market moving as well. If you own some ETH and BTC, this isn't cash, so if the whole market crashes, it goes down. Uh, I personally wouldn't be too worried because the overall P&L is built in a way that you win in some trades, lose in some trades. You just want to be net positive. We've seen some choppiness. It might be on the way up, I guess, as we see here, but the total should be as small of a loss or small gain, but you don't want to be too exposed. But yes,
okay.
uh,
Yeah, the Colt one is climbing too. I'm
yeah.
surprised no one liquidated.
Yeah, so let's go there. We have four positions open in four different markets. Two are meme coins, two are more established, I guess, boomer pairs. Cult is one where Rosalie had some cult tokens. Price went down. They wanted to exit that position, but they wanted to do it gracefully and maybe capitalize on that price move. So we just the intern and the intern decided to buy a put option on the called ETH ratio. And in that case, we can click on the details page or the icon here. It's easy to see from the P&L chart that if the price does go to zero, then you can make multiples of what you put in terms of paying. And unfortunately, the intern account was right for a while. Now price has reverted. we can still see that there's been a lot of violent price moves. And I think we started the position about here, but it did go down. Now it's going back up a bit more. So I would say that this is a bad trade because it was wrong directionally. And in addition, it's in range the whole time. So when you buy an option, you hope that the price shoots up or down, exits that kind of window. Now it's been in range the whole time. So it's also kind of having the user, the intern pay quite a bit of premia. So they paid 18% of their notional in premia, which is kind of sizable. If you were to trade options, 18% is a high number. And if we look at the premium going down, so yes, what do you think the intern should do with that account or that trade?
Close the position for sure.
All right, close the position. And because the more we wait, the more it's in range, the more we pay.
Yeah.
Even though this was a Hail Mary trade where had the price gone to zero, you make a lot of money. It's been 13 days. It's in the monthly option, but we're on the losing side. And the more we wait, the less likely it is that you can recover from the price you pay. So closing that position would be a way wise decision for the intern. And without the buying power usage is where we also have to be careful of. Most of these are in yellow. I mean, maybe it's not as serious, but you want to stay below 100% of your buying power usage. This one is 105. And 105 means that you're above 100%. You are actually liquidatable. People maybe haven't bothered with liquidating call positions, but anyone listening, they could liquidate that position unless the intern closes it first. But that's another indicator. Not only has it moved against the directional assumption, but also we put some collateral up. That collateral has been depleted, quote unquote. So we have to pay either through a liquidation or close it. So yes. Moving on. Don't be emotional. Don't be tied to your trades. Some go well, some go bad. You just want to position yourself where you're in the net positive most of the time. So moving on is one of the skills that people have to also internalize when you trade options. You want to trade multiple positions, multiple underlyings, not be tied to a single underlying, not be tied to a single trade. When it goes well, you're happy, you move on. When it goes bad, you're happy, you move on. So that's kind of the one thing that is extremely important. Don't dwell on the losses. All
Yeah,
right.
definitely.
Which is again, you wanted to uh yeah, the initial entry point was always going down so much, it's still going down. Could have been going up. Now it seems to be even neutral. So that neutral is also what's killing us in here. So yeah, lesson learned. Any other market that you want to have a look between?
Let's check out the other meme coin market, ticker Bitcoin. I'm wearing my shirt for good luck. So
Oh, there we go. And this is a smallest position. We put $500 of collateral. The position is earning $7, so about again a bit more than 1% in 3 days. Again, it's you cannot always analyze this, but the trade was bullish. Oh my God, look at this, bullish on Bitcoin, ticker Bitcoin, with respect to ETH. And can you remind me what did we decide to do here?
yes, so we are selling a put option. I think, yeah, it looks like it's out of range already. So we've hit the maximum,
Exactly.
I guess. Yeah, so that's
Best case scenario.
yeah.
The initial assumption was that it's positive, meaning positive delta price going to go up. The price did go up, and we can see from the chart that there is being someone is buying these meme coins. So yeah, look at this.
Do
Price
it.
went up. It did leave the range, so we're at max profit. It's a small position, and the premium you paid is $7, which is okay. Maybe it's gonna cover the gas. Gas is so cheap. But it's one of those where it worked exactly as it should. The more we learn, the more we can size appropriately. This is, for intern, a successful trade. They earned by price appreciation, but also earned about 1% in premium. Great, great, great. A win. Again, we'll see that when we trade, we want to have multiple wins. We had a win in ETH early on, we had a win in BTC as well. I think we'll see a win in Bitcoin. Fantastic. So since it's out of range, this is the signal to exit. You're not earning any fees because the price is out of range, and there's not more appreciation as the price goes up. So even though the price left 12 hours ago, we built it so that we don't have to respond right away. We can come back, enter and close it today, tomorrow. The whole thing is kind of realized. So fantastic trade. Good insight on the ratio there, Rosalie.
Thank you. Yeah,
So yeah,
very
so today maybe
bullish.
more on the
Cool.
management side because closing the cult one, winning the Bitcoin one. Typically, you want to have the two offset one. We did lose a bit more for cult, but overall we made some back on Bitcoin. But yeah, so two trades, one two to close because they worked like one worked like it should, the other one didn't work, but there's not more we can do, so we have to close these two. Uh, which other market do we want to see, the BTC or the ETH trade? Okay, so this one was
BTC.
also a directional trade. Uh, we'll see the construction, but this is a negative delta trade. We hope the price, the ratio would go down. So that means that Bitcoin can overperform ETH in the short term. Again, the month, 2 weeks time scale. The we can look at the initial price and the current price. It's pretty much the same. So even though it seems that the price went down, it's actually neutral. So neutral to bearish is where we want. There's nothing more to do besides kind of waiting for this to happen. The one thing we have to look at is that this is two legs. We purchased some options here, some call options at the higher strike, sold another option at the lower strike. So the P&L will be mostly directional in that case, but we're earning some fees again, 1.5% in fees that can help offset the losses. So yeah, what do you think we should do with that position?
Still wait. I think it's still 9 days. I think Bitcoin can probably go up
Yeah, and
again.
the ratio is a different trading vehicle than the actual prices, so it's been fairly correlated. So in that case, in the 9 days, it did not move much outside of that range. And I agree with you. We just have to wait and see how it's going to kind of evolve over time. But this is again a good trade to keep on. One thing to remember as well is that since Rosalie or intern has sold an option, anyone else can buy that same option. And if someone buys the option, they pay you more in fees. So here, that one leg has a 9% premium. So you earn 9% more than the Uniswap fees on that leg. And that's, again, a very good way to offset risks of just even Uniswap on its own. You want to go to the strikes, which are heavily traded. And if it's in the positive, if you're selling, people buying will make it more positive, more return. So this is also a good place to be. Other people could sell, other people could buy, but for now we make 9% more on that strike.
As I'm learning more about the ratio, I think in the future, I think I would probably take a different approach in this
Oh,
specific
okay.
pool. Um, just maybe like a strangle or straddle, something to, since they're so range bound. I wasn't
Yeah,
fully
I mean
understanding
the
that yet,
ratio
but
has been a focus of maybe more ETH maxis. It's a different trade, and you have to yeah, it's a unique trade. You cannot trade this anywhere else. We're the only ones that can offer ETH BTC ratio trades. We'll do the ETH BTC, the BTC USDC will be a different trade. ETH USDC a different trade. This one is pretty unique, but I would say that the trend may be on the downside. So you can say it's going to keep going, or it's going to reverse, or stay the same. At the end of the day, you just trade the best you can given the what you look at the market. So that's again a very good trade. We just have to wait for it to work for us. Nothing more. I'll quickly go to the ETH page. This one, we have one position. It's using 5.7, a small fraction of our buying power. Um, and yeah, so what can you tell me about this trade when you look at the page here?
yeah, it looks good. Everything's still in range. Um, I think it'll probably keep staying that way as well. So not too worried, although there's undefined risk, but I think it's
Okay,
it's
yeah,
looking
and
pretty
the
good.
break even points, which is what we see where the green zone kind of extends to, the more we wait, the wider they get. So this is a delta neutral strategy. The profits that we see here is 100% premium, 100% harvesting volatility. And in that case, we've had this for a week, 1% in a week. It's actually very good. It stayed in range. Even though the price could move up and down $100, you won't impact the P&L much. It's only the fee. So this is good, working for us. I would say that the management time when you need to realize your gains or kind of make it successful could be when you hit maybe 5 to 6% of the notional and premium. Could be another like month or 2 to 3 weeks, because if it's working for us, it's a 1 month trade. After a month, thereabouts, you should get 5 to 6% return. This is getting there, but yeah, very very good trade. Nothing more to do. And now that we kind of went over the spread, so do you notice something about these two legs? I don't know if you can see from that. So
Um,
here there's a V. This is
mm,
we call it Vega or Vagoid, but the V here, this one is 1.0. This one is what? What do you see? Yeah. So that
1.45.
call that you sold, you get 45% more in premium because someone purchased a large chunk of it actually. So we can click
Oh
here,
wow.
and
Okay.
all the bars again. Hopefully, it's a bit overwhelming at first, but the bars show you how much liquidity is being sold and purchased. Here, about half of the liquidity has been purchased. Someone is bullish ETH, they bought a call. Since you're selling, you get 45% more. This is huge.
Yeah. Wow.
So
45%.
the
Wow.
fees on Uniswap is something you get more. So any risk that you may have by holding a call option now is reduced because you are selling in a rich quote unquote strike. So that's the maybe starting point for the next trade. We'll try to do it quickly. We'll try to keep this under 30 minutes, but keeping that in mind, we'll try to create a trade that is capitalizing on that strike buying activity. So if we go back to the market, to the trade page, we will create one that aims to create a new position that gets the most premium possible because of that buying.
Okay.
So maybe back to the internal question: are you bullish, bearish, neutral on ETH?
Um, Bullish,
Neutral to
neutral,
bullish. Okay,
neutral to bullish.
and neutral
Yeah.
bullish is a good trade. I think I'll do a call. Wait, we can look at the strategies. You can buy if you're neutral bullish. You can buy calls, sell a put. We're on the sell side, so we'll be likely selling an option. Let me see what they put. Yeah, okay. So if you're neutral to bullish, you want the price to go up. You don't want to kind of overextend yourself. You can change where you sell in terms of the range here. If it's out of range, then you earn nothing. So here we can say if it's bullish, typically you sell a put option, and where you sell the put is where we can do that kind of optimization. But typically, when you sell a put option, you want to be around the 30 delta, 30-ish delta, which is that same. You're a little bit high on the range. You think it's going to go up, but you'll make mostly fees on the way up. This is what the Bitcoin trade was. Here, because we may want to optimize the fees, you look at the different uh, bars that you see here. So, is there one that is more striking to you in terms of the filled versus kind of empty part of that bar?
Yeah. So these ones are fairly empty already, and then as you move them, they're more full. So should we pick one that's
More
more full
empty,
or more empty?
because this
Okay.
buying activity, the existing sellers currently are making 2x the fees. Again, huge market inefficiencies. You can come in and be part of that party if you want. So that specific case, it's a 40 delta option, a tiny bit more bullish than we should, but then we would normally choose, but we can reduce the size. But because the premium is 2x, the previous one I think was a point 0.5 or 1 ETH in size, we can do half the size and still get a good and juicy premium. And it's a bit more aggressive in terms of delta, but that risk is offsetted by choosing the right strike. This one that is just a tiny bit lower is 35 delta as opposed to 40. So it's not much changing in terms of risk, but then the fees are 1x Uniswap. You go up a little bit, now they're 1.9x Uniswap. So as a if you sell options, you try to optimize for the volatility premium. Here we have this in mind. Yes, we have neutral bullish, but we want to optimize or maximize the returns. So one strategy is definitely be a bit more aggressive on being closer to the money, but then going to the strikes, which has a lot of buying activity. And even if you want to be doubly double dipping, if you want, you can also sell a call option at the same time. And the call option will kind of change the shape, like you see here. But if we were to choose also another strike that seems empty, here you make 2.2x. Both options will be in range. Both options will have kind of this. This one is a bit more neutral, and if the price shoots up, you have more risk on the upside. So that's the trade-off. But something that goes from just being a pure put that has capped upside, or something that is delta neutral-ish that has unlimited risk on both sides, but you double your position sizing. You get 1.9x on the put, 2.2x on the call. That would be maybe even more aggressive. We can size appropriately so that it still maintains the uh, 5 to 10% option utilization. But these two strike either a short put if you're a bit more bullish, or a straddle. This is a strangle because the two strikes are separated. A strangle that earns maybe on average 2x the fees. This is a dream for Uniswap LPs. Is also another strategy we can do.
This one definitely looks more attractive to me at the moment, given that somebody bought my other
Yeah. So
option. So maybe,
that's
yeah,
what we
the
said. If we
sentiment is
keep
good.
the utilization, the buying power utilization low, we had 6% utilized. We have lots of room to expand. And if you do a monthly trade, maybe once a week, you can add a new trade, close a new one, you roll multiple trades at the same time. That trade capitalizes on the premia. One next week could be a bit more directional, but you have two options that are created. So that's another reason to kind of always be active. Doesn't need to be every day. Here, a week later, we could create a second option trade, but now here it's extremely uh, um, it's a huge return in terms of premium. So maybe I'll paste this on the YouTube chat. We have chats here. I think people are actually asking questions, which is great. I'll paste this trade on the YouTube channel. Maybe someone will paste this on the Twitter as well. But yeah, this is a juicy trade that intern could do, or Rosalie has chosen for them. But yeah, this is good. So I would also personally maybe do this myself. This seems very very good. The buying activity we see is good for the protocol because now you can have more selling, Dredge more buying. We have a small position size of zero point 0.5 ETH. If you come in at 10 at some point, you want to have enough liquidity. So that's another one that you could do. So amazing. So we'll go back to the. Okay, let's do it this way. Yeah. So yeah, we have 4 trades. We'll close 2 of them, maybe create a new one. This will get very dynamic as we handle more markets, typically without kind of scaring people away. I'm able to manage 20, 25 trades. This is something where you have a more holistic view of the whole market, and you don't have to look at each one. You just have to look at the whole. So for now, maybe 2 trades in one market will be kind of slowly getting up and teaching you how to manage maybe more complex portfolios. But yeah, I think at this point it's actually very, very successful in terms of trading. Hopefully, you're learning a lot, Rosalie, and the others too as well.
Yeah, definitely. I think it's less scary than I imagine it to be, and I think kind of understanding risks more and rewards and just kind of I always, you expect to make a ton of money or you lose a ton of money or something, but it's just like, you just try to not lose as much. And it's not about, earning. It's more about figuring out how to lose less, which, is great because meme coins for me, like every day, it's like
All red.
down only. So
So
this
you
is
could
like
be
much
setting
better.
options on meme coins. You could actually be directional and shorting them. This is kind of the big unlock in options too. And yeah, the expectation should be a large number of small wins, a few numbers of big losses. So here we haven't been subjected to one. We'll see how we manage. There's always a way to manage and get out of those, but it's the balance. We had several successes, one small loss, which is on the buy side. If you buy options, you'll see a lot more of these losses. If you're on the sell side, you want to position yourself on the kind of upswing and always have positive outcomes. So yeah, thanks very much. So this is stop trading, stop losing, start trading with Rosalie. I'll bring in Brendan from the Panoptic research team to go over. Actually, we'll do this every Friday. Interesting trades, interesting research content, some analytics. How can we actually recap the week in 30 minutes or less, highlighting the good trades, not making fun, but then learning from the bad traders out there. But yes, thanks.
That's right. We're not polymarket, but
Yeah,
great to be
exactly.
here.
Hey, bye. Take care, Rosalie. Hey, yeah, what's up, Brendan?
Sweet. So yeah, huge announcements as you made here on the Unichain launch, with the pips markets as well. So very excited. I've been trying out the markets on the L2. It's very fast. It's very cheap. Very easy to bridge too. I've noticed the abstractions that the Uniswap interface has made to bridge, wrap, swap. They're all kind of combined into one, so it's all the same thing. So easy that you might accidentally buy the wrong token on the wrong chain. But no, it's been a very pleasant experience, and then that just makes it even more pleasant on Panoptic. So
amazing. Yeah, the Uniswap is solving the cross-chain slash interop for swapping, and it's actually great. So yeah, and I'm also eager. I'm staying on mainnet myself, but I'll maybe also deploy some capital there on layer twos. So we'll go Unichain all layer twos as well, where there's Uniswap we can go. That's very good. So yeah, and maybe you had some numbers also to share, or some things to go over, I guess, on the Unichain markets.
yes, so real quick on Unichain, it's very easy to get to the trading for those of you who have been using Ethereum and want to try out Unichain. You just have to connect your wallet, and then there's this switch networks thing. It kind of is hidden here because there's no icon yet due to the wallet providers, but it's right there. You just pick Unichain, and then you'll have access directly to the V3 markets right now. So right now we just have these two markets, ETH and ETH, but with different stable coins. And then you can access it if you deposit on here, if you trade on here. You will start earning points right away, and you can check out your points on the leaderboard on this Pips tab. So yeah, lots of activity has been happening. I think it's a very, very nice for retail traders. So that is exciting there, and we're already over 10% of the.
Would you look at
market
those
share of the
APYs
Uniswap.
though?
Yes, so these we'll have to double check these APYs, but they are typically pretty high initially, just because tons of people have been depositing and trading. So every time someone deposits or trades, they pay 20 basis points, so 0.2%, and that gets redistributed to basically all the depositors that have come before them and that are still haven't withdrawn, basically. So there's this kind of reallocation every time someone trades or deposits after you, it goes to you. So it's quite nice if you're early in the pool. Of course, these numbers will probably drop down to more normal
This is
levels.
what we see on mainnet, but the key point, this is a monthly, maybe we default to weekly on layer twos, but it's an option that you only have to manage every month. So you deposit, you create that option, you wait a few weeks. So initially there's always this spike, someone deposits, trades, and then you wait. So the yields are 15 and 10% on ETH and USD, on USD and ETH on mainnet. I also think it's going to be closer to that as well, but it is kind of the fact that you have to trade once and look at it only in a few days means that you have spikes, but then it relaxes down. But yeah, no, go there if you want. If you're the first depositor, you are getting this analyzed. But yes, the more people trade, the more it's going to clip something more sensible.
Yeah, and this isn't even counting points, so huge benefits for the early depositors. We actually have some questions in the chat, as you may have seen. One from YouTube from Robert here. Maybe you can feature that one, and we can go over. Yeah, so about linear exposures and payoffs. Can you do that on Panoptic for meme coins as well? And maybe we need a little bit of context on what linear here means as well.
Yeah, so maybe on the trade page. This is your computer. So if we go on the trade page for This is ETH USDC on Unichain. We are agnostic to some extent on the markets. It's actually meme coin or ETH or BTC. We can do the exact same trades. And maybe on the strategy tab, this is maybe what this question was about. But there is a long perp or a short perp type of trade, which is extremely linear. It's delta of one. It's replicating buying the asset, or it's replicating shorting the asset. With options, you can create quite a bit. And if you go to long perp, for instance, you can imagine that you buy what looks like one ETH, and if the price of ETH goes up by one, you earn one more. But it's effectively setting a put option and buying a put option, a call option. It's two options together that create this kind of super a bit weird combination that creates this payoff. But the key point is that you can buy one ETH with much less capital. You can get 2x, 3x leverage on that one ETH. The only thing that needs to happen is that since you're buying a call in this case, there needs to be some call liquidity. On meme coins, the one that we did with Colt, there was some puts and calls sold, so you can buy there. If you just want to be directional and only sell side, you have to sell put, sell call, be a bit less uh, linear, as it says. So if you were to kind of delete that call leg, what would happen is that this is the payoff you have, but you can drag it all the way to the right. So you can create some in the money action here, also getting what looks like a 1-to-1 exposure up to 4K in price, which is great. Also with capital efficiency, because it's in the money, you're less capital efficient. So it could be like 1.5x type leverage, but that's another way to create linear payoff in the neighborhood of that price. And if the price does shoot to 5,000, then you start to getting this kind of concave payoff. I think you're muted.
Thanks. Yeah, great. I forgot about this linear payoff on the regular option, but the trade-off if you just do that is you're missing out on these Streamia fees
Exactly.
between 27.74 and 44.83. So if you're way out here,
this would be purely
you don't get.
directional, purely on price move and not Streamia. You have some level of capital efficiency, which could be attractive, but yeah, I personally wouldn't do this or sell anything out of range because someone can buy it. It adds a bit more friction. If you're barely in range, and if your linear payoff reflects a linear price action, if you're barely in range and it does go up 20%, you'll miss out maybe on the tail end of the profits, but the fees and the price move will be where even though it goes up 20%, you may have 15% gain type of thing. But always efficient, always getting paid for it on the short side.
Amazing. So one other question we had, also from Robert. Yes, do you have any SDKs or open source contracts if you want to build vaults on top?
Yeah, so this is maybe a bit of alpha, but this is on the roadmap. So maybe this open source contracts. A lot of the new protocols could be Morpho or even Uniswap v4. They are modular, composable. Other people can integrate and build very easily. We've built Panoptic v1, I guess, with a drive to succeed in the options world, but we are also recognizing this is kind of the long-term benefit of having more than one actor, one and more protocol working and then integrated. So we are building our own personal vaults where you can be extremely passive and just deposit your funds, and these funds will be either deployed for trading options or being a passive liquidity provider or any combination of tokenized type of trades. Ribbon covered call type vaults if you want, or it could be a ribbon style delta neutral vault, or there could be a lot of ways. So we are building this. We'll make it open source. Anyone can clone it, and we can even imagine having a factory where we launch any new strategy out of that. The SDK, which is how you interact with the blockchain on a more kind of trading side and algorithmic side. We have a trading bot that's created. We have a SDK that it's public and may need to be updated, but that's also another thing that a good friend of ours, also called Robert, developed a year ago. So that's also something we have. We can actually either in the comments or later on we can talk about it. But there's a Hummingbot integrator. There's an SDK as well, created by the Numoan team or Numo team, and on the other side we also have smart contracts in the pipeline.
Wonderful. So hope that answers all of your questions. If you have more questions, please drop them in the chat on YouTube or X where we're at. We will switch to our kind of top trades of the month since we haven't done this for about a month, and featuring the top, best, and worst trades. Actually, let's start with the worst trade. So, quick question for Guillaume: if you had to guess what the worst trade was, put, call, straddle, some other animal name, short or long, what was the worst trade
Are those
on
all in the
Panoptic?
ETH market, or we look at the ratio?
Yeah,
Okay.
just the ETH market, just absolute like
So if we
total
look at the
losses.
history of the past few weeks, there was this huge drop that happened over the weekend. It collapsed 20% in a matter of hours. I would say that anyone that was caught either selling a put option or actually selling a put is the only way you get wrecked, because if you buy at calls, it's not as bad. So anyone selling a put option probably saw price going down. They are deeply in the money. They have 100 delta exposure, so every dollar that moves down, the more they lose, and that would be, because of the directional action we've seen, likely the biggest loser.
Very good guess and solid reasoning. Let's see if you're right. I'm going to switch tabs here to the position, and it looks like you are correct. It's a very narrow, actually, 1 day short put. And so these 1 day options aren't actually even enabled unless you turn on advanced mode, which, by the way, if
Oh,
you want to get to, you just hit the settings and click advanced mode
sorry,
up there.
the
But
logo is
yeah.
hiding it. Let me.
Oh, sorry.
No.
Yes. Let's
Yes,
try again.
exactly. Oh,
It's in the top right corner, kind of hidden behind the logo. If you click the settings gear, it'll let you enable this advanced mode. It gives you kind of these cool Easter eggs sometimes on certain pages, which includes being able to trade more advanced narrow position options, which could be a little bit riskier, like in this case where this position is no longer earning any stream yet. As you said, it has a 100% linear exposure now that it is completely in the money, and big banger here with the amount of
fees. No,
loss,
but yeah,
I
the fees.
guess.
They got
Yeah.
some fees while it was alive, but very quickly it went out of range. So I would
Yes.
imagine within a few days it got to that like 2 or 3%. So yeah.
So January 31st looks like it's open. February 1st it stopped earning
Mhm.
fees, so about less than
2
2 days,
weeks
and then
ago, yes.
this is a $11,800 loss just purely from price dropping. So if you had to recommend some type of advice for this position, because this is pretty deeply not underwater, yet, because this person has a lot of collateral. I was looking at, but definitely not a favorable position. What would be your advice for
Yeah,
this
and maybe the
trading?
one thing that we don't know is that this could be hedged in a way. So if you are what looks to be long, in this case, 20 ETH, they are 100% long 20 ETH. Probably they set it up in a way that they could hedge. So even though it seems to be a big loss, they could have been hedged and the loss was either much less or zero. So that's one thing, that what we see here, there's other ways to hedge. If it's a brokerage firm, you can use futures. If it's a protocol, maybe you hedge also on chain, off chain, but in a separate protocol. Maybe we can have all of this be included in Panoptic one day. So that's kind of one caveat. Even though it looks weird, the fact that it's still open probably tells me that they either are very confident the price was going to bounce back, or they're hedged and it's not a net loss or net loser, because they have short 28 somewhere else. It's averaging out to zero. But yeah, given that, I would say that this happens quite a bit in TradFi. You sell an option, say a put, you think is going to go up, the actual price goes down. How do you manage this? And the best way, again, in this case, it's a 1 day option. You don't want to put all your eggs in the basket for a 1 day option and not look at it for 14 days. So of course, this could have been managed much earlier, but the price move was so violent that, again, even then they would not have anything to do. So first is to size appropriately, and also the time scale you choose should match how quickly you're able to respond. The same position in the monthly could have been barely out of range, and it could have made a lot more fees on the way down. So I would say that the way I would manage this, I would start with being on the 1 week or 1 month time scale. If it goes down, there's two ways. You can either reduce your size or close it altogether and kind of eat the loss. It's fine. You thought it was going to go up, it goes down. You just have to manage. Or you can sell another option to neutralize some of those deltas. So here, setting a put option is positive delta. Setting a call option is negative delta. As we've seen with the intern and Rosalie's trading, straddles is a good way to be delta neutral. So what would happen is that if you zoom out a little bit, you would sell another at the money call option. So you would have kind of an inverted strangle, but you have one option which is deep in the money on the put side. You have another option that is deep in the money in the call side. So if you drag the put all the way to the right, very, very far, yes. You can have also, if you, and now the at the money will also create a positive profit zone here because you're short in that call side. So it's called an inverted strangle. It's offsetting the risk. If you don't think it's going to go down further and up, instead, now it's still positive delta, but you have kind of a larger profit zone that is created. So the way to think about this is that the put is in the money. So now you're owning the shares. You set a covered call against it, and that's what the call is doing. You have in the money puts. You assume it's the asset. You just set a covered call or call, and that's going to kind of restore this. So the maybe it's going to happen with the intern account, but my personal is to first close it earlier to mitigate the losses, but also sell effectively a covered call because you're optional in the money. This is going to create that type of still upside move. It may not offset the 12K worth of losses, but if you are in range and if that person was selling it 2 days after it was out of range, they would have collected another like 2 or 5-10%, I'm sure. That's kind of the idea. So neutralizing the deltas. You want to be delta neutral. There's many ways to do this. Inverted strangle is kind of what you do when you have these huge moves in TradFi in Panoptic.
Yeah, I think a big part of it was ignoring the position after this for some reason. I don't know, maybe this person went on vacation or was hoping it would go back up. As you mentioned, the price went down really fast though, because it started at 3,400. It's now at 2,700. So big drop there. And with the 1 day.
No, that's right. If you have the same option but on the 1 week, 1 month, I mean, so if you delete that call and move that 3,400, that's right. I would say it's barely out of range or even still in range, maybe. Yeah. That option might have still been in range.
Yeah,
so
still in range.
And it did collapse to 2,500, and that's another thing. But that allows you to respond much more quickly by having the time scale be wider. So,
right, yeah. So if you notice on the UI here, when Guillaume's saying in range, it has an effective spread of 0, which means it's earning 0 fees because it's out of range. The range here is signified by the red dot, and so with the 1 day, it goes out of range at the 33.21 ETH price, but with the 1 month, it doesn't go out of range till that 27.
You could go 1 year too. So if you're extremely passive and you do go on vacation for 3 months, you can still trade. This would have been in range. We do some estimate of the premium. So this is a bit more the best case scenario, but in reality, you would also be still in range with a 1 year. The fees after 1 year will look like that. After 2 weeks would be much smaller, but you would still be earning fees over time.
Yes. Great advice, Guillaume. I hope trader B156 can do something about this position, or hopefully maybe the ETH price just goes back up. But big losses here. So I want to start out with that just to get us kind of the what can go wrong scenario. Let's switch to the what can go right scenario. So yeah, you may or may not have seen this position, but if you had to guess again, what do you think would have been maybe the best performing overall trade in the last couple of weeks?
I know the market, at least on Panoptic, a bit. So I know that selling a call option with the price move that we've seen is likely one of the best way. But you would have to sell it kind of at the money or even in the money a little bit to fully take this into account. So I'm not super sure that there were positions in that kind of good strike, good location. So I would say it might be a straddle or a someone think delta neutral, but that earned a lot of fees, maybe. Um, but yeah, no, I think yeah. Let's say it's first choice. I would say it's a straddle or strangle that was earning a lot of fees because of the price move. Second guess is a very well deployed call option that mainly got directionality right when the price collapsed.
All right, so either a short straddle or a relatively in the money short
Yeah.
call option is your two guesses. So we'll switch over to the tab and we'll see. You are correct that your second guess, it was a short call
In the
option.
money too.
Yes, and it started relatively in the money. So good intuition there. Big contrast here with the amount of Streamia being earned. So you get a double whammy here of bonuses with lots of fees collected with the Streamia, basically the Uniswap fees plus that kind of premium spread on Panoptic, but also as you mentioned the correct directional bet there with the price dropping. And so this is something cool you can do only in Panoptic, unless you go about this roundabout way with lending markets, which is you can LP between the price range of 2,900 and 3,700, but have a bearish assumption. So I saw you post earlier today about impermanent loss. How if the price goes up, you didn't lose anything, but you did miss out on some theoretical gains if you had done some other trade. But this is kind of the inverse of that, where if the price goes down, actually, you actually profit, which is really cool because you can't LP in Uniswap with a bearish direction. But this is basically LPing in Uniswap with a bearish direction through Panoptic.
Yeah, and again, the contract is about 20 ETH as well. Maybe it's the same account, and maybe they were geniuses and they got it right. But yes, the setup makes sense. All these large price moves, you want to be positioned either delta neutral because it's a little bit easier to kind of, it's harder to predict where it goes. You want to be somewhat delta neutral, maybe offsetting positions so that you can still survive after the launch move. In that case, they made 5% in premium, which is a lot, and only an extra 4.5% in price move. So the bulk of their returns is still in the premium side. So even though they were right directionally, the fact that they earned so much premium, in that case, again, the total profit of 6,000, bulk of it is premium. It's also where you want to be positioned well. You can buy options and be hedging risk, but you would be paying 3% or 5% in that exact same trade. So I say that this is likely, and they closed it also in the opportune time, I think, a few days later. Yeah. So this was,
Yeah, they closed it a little bit earlier than, there's no way to know, but they locked in kind of the profits. There had been that price drop. If they had waited, they would have earned more fees
oh,
on the way
but
down and also more
if you
profit.
look at
But
and if you, you can
I'd be
drag
happy with,
the y-axis, so you can zoom in and out on
yeah.
the, no, the y-axis, the 15. So if you go up,
Oh,
you can see how much more they would have made, and it's not much, right? The delta or the slope is already almost zero. You have a tiny bit more. So this is a prime
good point.
example of a very well managed position. Congrats.
Yes. 1 week option. It looks like they held it for about, what is that? 17 days, so
Yeah.
about 2 weeks.
So and they earned
So
pips and points on it. They earned profits. They were right directionally. You can only do this on Panoptic. I don't think there was people buying that option as well, so they could have made more.
there was
And
yeah, the loss versus Panoptic was very low. No one was taking
oh
advantage of
yeah, if you
buying
go
the
back to maybe on
call.
the premium side, we should show maybe the comparison or some way to say the Uniswap position earns X, the Panoptic one earns a bit more. But yeah, um,
Yeah, so there's nowhere on there right now, but I do have this position pulled up on how much it made in Uniswap, and pretty much the majority of these fees were from Uniswap directly, and not from
yeah,
any type of option buyer coming in subsidizing the fees. So yeah, in Uniswap, actually the amount of fees was about $3,519. So that's 1767 USDC
Okay.
and 0.56 WETH. So almost like 99.9% of the fees were from Uniswap. Someone could have taken advantage of this liquidity, bought a call option. There's just, there's liquidity here waiting on Panoptic
Yeah,
for you
and
to
this is the
trade to
1 week, so we'll have to also make it a bit more obvious. The 1 week is a sneaky way to maybe hide your liquidity because it's not a default 1 month. Because we do see
Good
a lot
point.
more trading buy side on the 1 week, 1 month for sure. Yeah, we should do the you go on these
Yes.
web to websites and they have 25 different, this is the account, this is the priority. Yeah, so at the end of the day, something we do, but overall, again, masterful option trade. I wish I would have done it. It's not me, but overall, this is great. And typically, I don't want to spy too much, but if you have one call open, I would say that it's likely that you have multiple options open. You have a lot more. Yeah, if you go dashboard this way, we can spy on that person's position, but there might be more than one position uh, that offset the risk. And
Yes.
now they have a put option. They are bullish. I mean, so they are. I'm sure they opened it. I'm sure pretty recently, but they spy
I don't
spy.
know if the spectator mode
Yeah, we see
keeps.
their transactions.
Oh, yeah.
Yes.
There you go. Yes.
Oh, maybe it's not the right one. Might be. Anyways, it should show all of them.
Oh, yeah. Sorry. This is the impersonator. But yeah,
So
this
anyway,
is
that person's.
currently open.
You on Unichain as well. So they are double trading. But at the end of the day, I think this is kind of a very good example, and I like that we go over those because knowing after the fact this position made money, you get to a point where you know what it should be, and if it's not that, then yeah. So this one, oh, they reopen a new call, earnings stream, yeah. Oh, it's the same holder, I think. Interesting. That's what I said.
Oh, is it?
They seem
Oh.
fully they were hedged, or at least they had two offsetting positions. They make 6K on one side, they lose 11. It's still manageable, and I'm sure they have a bunch of fun doing it, but also funds available. So, anyways, yeah. So the full story is also portfolio level, but at least that one had the biggest loss, biggest win. They were exposed, but then the offsetting positions made it less worse than it should be. So that's very good.
Indeed. So good coverage. I really appreciate the advice. So hopefully we can take some as we're trading here with the upcoming markets. I don't know if there's any events upcoming that are in the markets or for Panoptic that you'd like to discuss before we kind of end the options hour here, or the
Yeah, what do you have
trading
in mind?
options.
I'm not sure.
So we do have these PIPS announcements. So we'll announce this shortly. But as you know, there's the points program going on for these markets here. You see that kind of PIPS icon here. That means that market on both sides, the USDC and WETH, earn PIPS for deposits and LPs and trades. We have since launch, which was just under 2 months ago, we have already issued 173 million pips. So that is kind of the total issuance here, 173 million. And you can check out the leaderboard, how it's broken down by person. Quick breakdown of the actual categories. So there's 3 categories that you can earn pips in. You have the passive LPs, who are depositors. If you deposit on Panoptic, you earn passive yield. And then we have the active LPs. So these are the option sellers. These are the ones LPing into Uniswap. And then you have the option buyers. So these are people taking the other side of the trade. They're shorting LP tokens. They're going long or short on the token, on the underlying. And so these 3 categories earn pips. And so kind of the breakdown here is just under, half, 50% or so is the passive LPs with 71 million pips issued. Right above them are the active LPs and option sellers. They've had 85 million pips issued. And then the option buyers are kind of trailing with only 16 million pips issued. So that is the kind of roundup of the pips today. So we were giving boosts for people who were early users of Panoptic, and also those who LP'd on Uniswap v3 and v2 in the past. And so you can get an extra boost on your points and kind of climb up that leaderboard. So check it out. The Pips leaderboard here, app.panoptic.xyz /leaderboard. And stay tuned for kind of our weekly announcement about points and what's going on with that, with the new markets. We now have a total of 4 markets that you can earn pips on. So there's an ETH one, a Bitcoin one, another ETH one on Unichain, and also a special one, the Bitcoin ETH pair there.
Yeah, amazing. Yeah, so the as you see, a lot of the fees go to sellers and those that may be on the market making side, and this is because this is kind of the most important role to play in a sense. You need passive liquidity, you need buying, but all of this has to work with a ton of selling. So if you also, and this is what we try to do with the class as well, if you are starting out, besides just putting your funds on the passive deposit, you can also sell 1 or 2 options or create something that is risk managed, something you can go in and out easily without having to kind of have your whole portfolio tied up. That would be kind of, and also another way to kind of multiply the returns. We did describe the PIPS program and allocation in a PDF, which I think is still on our website, and the announcement as well. We've learned again a lot from the more recent airdrops and more recent PIPS points program to see what works, what doesn't. We definitely want to see this grow with the community, but also have the community be feeling rewarded for the efforts and time that they put into basically trading, making money, also losing some of it, but then the pips can offset some of that earlier kind of rookie mistakes. But yeah, at the end of the day, welcome everyone to participate. We hope that you use the pips as a way to kind of enter new markets and try new strategies, but also more generally kind of have this be kind of a home base for a lot of your trading activity as well.
Amazing. Well, hope everyone has a happy Valentine's Day. We'll probably see you in the US. We got a holiday called President's Day on Monday. We'll probably see you for our research insights show called Beyond the Greeks next Tuesday, featuring some talks with our researcher Nathan about gamma traps and fun stuff like that. And